think, eventually could be a $250 billion company. And that's based on like earnings from 2035, like if it got there. And, that's where this stock gets, north of $1,000 a share. So this was the same kind of thing I was looking at when I was buying Meta in 2013. It's still massively undervalued compared to, where this company could be. He's an absolute psychopath, which is sometimes great to have as CEO. If he pulls off what he says he's going to pull off, this stock is incredibly undervalued. We don't know how they're doing it. We don't know how this is going to be profitable for them in the long term. And that confusion from the traditional like dinosaur in the industry to this new industry titan.
The way the chart is set up, it really looks to me like you're risking between $2 and $5 to make a minimum 20. You're like, if this breakout sticks, I think you get a double out of it.
Cause we pop 'em like overred and vodka. C3, okay. A millionaire. I'm a young money millionaire.
Welcome back, boys. That's a new rendition that I made as well. So going to be dropping new bangers every single week, and maybe I get a record deal at some point. The markets are finally green. Nasdaq's about 290 as of this second. Dow Jones is relatively flat. S&P is relatively flat as well, but all green today. So is this the Trump? Is this the Trump push into all these funds now need to distribute that $1,000 in the S&P, or is this just the revival here we needed after kind of a tumultuous last few weeks, I'd say?
From my perspective, I'm not a huge fan of green Mondays. I usually like pretty shitty Mondays. When I look at like the weekly candles, I like to see a week start to the week and then rally into the end of the week. Like that's just in a bull market and uptrend. That's kind of what I want to see. Mm-hmm. That being said, the Qs, we're mid-range, and what are we on? We're on like week 10 of this. We're back in a fucking range, and we're on week 10 of it. So I feel like we're going to resolve this to the upside. And I would like to see it, like I have said, I would like to see it sooner rather than later, but beggars can't be choosers. We'll have to see what happens. So I guess for me, it feels to me like kind of a nothing burger at the moment. We're just kind of chopping sideways and in the middle.
I mean, the other positive headline we just got is Trump's actively discussing an investment and savings program for adults in the U.S. So it'd be pretty cool, enticing more people to get cash in this market.
Yeah. It's pretty. I was looking at it from an outsider perspective, and I was just like, this is one way to get a ton of money into the system with people being happy about it, right? Yeah. I think this is a smarter way to do it, to teach people to invest versus just giving people cash. But, it is interesting. I'm sure many families would disagree with me, and they need groceries, versus the markets. But it is fascinating times we live in, nonetheless.
It's an exciting time. I don't think there's ever been a more, I guess when I kind of was getting into the market, Kramer was, it was like 2005, 6. Kramer was kind of just becoming real bigger on CNBC. His kind of personality, I think, drew a lot of people in. And, currently from 2020 on, just between the intersection of like all the things from space to health tech, like all the shit, it's like,
yeah,
dude, how can you not want to be? I suppose it can be kind of overwhelming, if you don't know what you're looking for and you're just hopping on the internet and kind of, reading headlines. You could probably totally work yourself into a tizzy and be like, dude, what the fuck are we doing? Like, where was this, like sci-fi? But on the other hand, it's like, dude, this is cool.
Yeah, we live
hold on for another few years, and dude, you might be living to 150.
That's what I tell my parents. I'm like, hang on 10 more years, or you're hanging on another 100. Because the technology, we talk about this a lot with like the healthcare. I think AI in healthcare is going to be the coolest, because personalization of medicine is going to be absolutely massive down the line. Because 30,000 people die from Tylenol a year, right?
Yeah.
And every person has their own DNA. You're going to be able to find like personalized medicine. It'll be probably more expensive, but you'll get something that actually fits your body. Which
there's such an abundance of there's no shortage of information out there. You can go on the internet and find out whatever it is you want tied to your health and wellness. And with the rise of social media, and especially Joe, you could probably talk to this stuff and kind of like the health and wellness industry and all the biohacking shit. There's a sect of people that really want to either go hard to like the right or hard to the left in terms of like, Eastern medicine, Western medicine, when realistically, a blend of all of it is probably the real answer. There's probably a time and place for you to go to the doctor and take a antibiotic or, some surgery that you need. But there's also probably a time and place for you to take your fucking shoes off and go walk in the grass and spend some time in the woods. So I think to your point, when it comes to AI is going to be the thing that like basically forces this or pushes it through. I think like you're not going to be able to question the truth of what ultimately like AI kind of tells you, right?
Yeah, see, I also have a major distrust of doctors because they've been wrong so much over the course of my life. Yeah. But I've always found like Googling and studying stuff myself, I get the answers I need and I go to them saying, look, this is what I need. So to have, when you're armed with AI and you've actually got like your symptoms, it's spitting it out. It's not some doctor that's then trying to look through and try to figure it out. Like you can pretty much figure out what's going on. Same with, anybody that's looking at all their biomarkers, how you want to optimize, whether it's optimize your hormones or whatever you're doing. It's more at your fingertips than ever before. And that's the exciting part.
Yeah. Now, the last thing I'll say on that is your doctor probably loves you because my doctors used to hate. I was on the Yahoo message boards, before AI existed. I'm like, well, according to this guy on Yahoo message boards, I have X, Y, and Z, and they just like hate me, every single time I'd walk in. But I have noticed I went to a doctor and he started going to Gemini, and I was like, what the fuck's going on right now? Like anyone can do this, So it's crazy. Yeah, the world that we're living in. What are we watching? You guys sent me over like 30 different stocks. So Joey, I'll come to you first. What do you want to touch on first here? I know we were looking at a lot of exciting ones and then your head just kept going back to Reddit. You're like, no, there's a few others that are just stronger and better at the time.
So that's what I always fall into is you'll see a shiny new toy and you think, okay, this could be fun to trade, start building a position. What I always go back to is then I compare it to the positions I'm most excited in that are already in my portfolio. So, we were talking about a couple different names and then I was like, well, compare it to Reddit. And I'm still looking at a company. I think it's at 29 times. It's up. Well, we talked about this last Monday and it's up 22% since. It's still massively undervalued compared to, where this company could be. Mm-hmm. So that's what I always get into. We could put on this shiny new trade, but I've still got AppLovin at very inexpensive valuation. So that's the thing. Like, I want to invest here, but this is better. Why not just add to this existing position? Add to the winners rather than trying to throw on too many positions, do too much. And like I said in our chat, you don't have to own everything. Mm-hmm. But looking at Reddit, so we've got.
Nick, you want to pull the chart up as he goes through that?
Yeah.
Keep talking, Joey.
So we've got Reddit up, 21% since we talked about it on Monday. The big thing was a 14% jump last Wednesday. And, there was no real news on it. One of the things I saw Jonah was tweeting about it and a couple other people that there was a rumor that they had one of the deals with the LLMs that we discussed as a potential catalyst for this one. Now, whether it's, settling with Anthropic and getting a deal, or if it's Gemini or OpenAI, that's kind of what got the wheels turning on this one. And it just hasn't looked back. It's added another, 8% since then. You've got it up 5.5% today. So, this is one where I'm still looking at it and we've got it at, let's see if ticker is up to date, it's at 26.6 times next 12 months price to earnings. And that's while it's growing at a 56% clip. Those numbers will go up if These LLM deals are renegotiated and posted in the next couple of months, since that is essentially purely profit for them. But I mean, even looking back, this has a 52-week high of 283. And if it got to that level, it'd still be 39 times earnings, which 39 might seem high, but for a company that's going to grow earnings at a 56% clip 2026 and another 28% 2027, it's still, I mean, it's well within reason for a growth company.
Nick, how are you looking at this with the charts? And what, and Joey, you can answer this too. Just like, at what dollar amount are you like, okay, maybe it's overbought and I need to trim, or is this like something you're holding for the next 5 years, you think?
Yeah, before I turn it over to Nick, so, I had owned this for that initial surge, and this is one Joan and I talked back and forth about a lot. I had trimmed at 200 on the initial run up, and I think the last trim was like 250. And then it came all the way back down as the market pulled back, and I was adding to those heavily at 119 and 129 a couple different times. So I actually made the position, my original position, it was a good amount, but I actually built that on the decline to 5 times the original position. And much of that was, like the Chris Camillo type thinking. If you've got a play that is an absolute banger, the market is not realizing what you know to be true, go in, very heavy. So I didn't make like a 70% play like he did on Amazon. I made it, I think it's like 20, I think it's grown to 29, 30% of my portfolio right now. But that is significantly bigger than I would traditionally do, just because it was such a high conviction play. And then when I'm talking to Nick, GP, and some other people, when they're talking about the actual charts, Nick, I think last week was saying the 190 level was what he was looking for, and that's when it would absolute break and just start soaring. And then we got a text earlier from GP, and he's in Reddit. So he sees what Nick had seen on this potential breakout that, it seems to be coming to fruition for us.
Mm-hmm.
Yeah, the chart looks great. Zooming out to kind of the weekly, you had kind of a relatively short-lived kind of an IPO base here. And then we're getting a much bigger build out now, which is really what I like about it. And it's perpetually putting in higher lows kind of within this base. You could kind of look at it as, somewhat of an ascending triangle or just kind of a base on base. And again, on the larger time frame, the trade really doesn't get started until it kind of breaks out of this base and takes out highs. So you've got plenty of time to build into this if you are in the camp that this is going to resolve to the upside. Within these patterns, I talk a lot about kind of 5 legs within a pattern or 5 touches. And the reason I look at that is because once time and price pushes past, like, let's say that 5th touch within a pattern, if it doesn't resolve in the way that the pattern is implying, it means that price needs more time to build more energy for it to actually break out. It just, whatever, it's not ready for prime time. So kind of looking at this, I would put a 1 here, 2 up here. You got your 3rd down here. This kind of double top is your 4th, and then you've got 5 here. So this is what was kind of leading me to believe that, you zoom in to the daily, it had kind of this nice range built as it was putting in a higher low off this already kind of rising trend line. Obviously, we didn't know that this was going to be the touch here. It's a little bit, this is coming in hindsight. But then you kind of zoom down to the daily, and you had this nice consolidation. Again, it kind of flagged right under the 200-day. It's about as, even on a short-term, like intraday basis, it was a gorgeous setup. So if depending on how aggressive you wanted to get, if you're just looking at price from here, you could say that you have a wide range bar on above average volume, and it's dicing both the 50, the 20, and the 10-day short-term moving averages. Like that's a signal that this move is igniting.
Mhm.
So like you could call this a wide range igniting bar, whatever it is you want to call it. It's igniting a move. The following day you got follow through to the upside, really no give back, followed by an inside day, and then we got the absolute monster ripper bar on was that Wednesday. So the things just continued to stack and are continuing to stack. At this point in time, you're back within this kind of range, this pocket of space here. So there's not really, again, unless you're trading it intraday, I don't see a trade here unless you added on the backfill towards the 200-day, or you're waiting for the 10 or 20 to kind of catch up. And again, adding to it on a little bit of backfill. You should already be in at least a quarter, if not half size position, if you're a swing trader, because your target should be back here towards highs, in my opinion.
How long? What's the time frame on that?
On the short term, I would assume, pending the market cooperates, if the Qs broke out and resolved to the upside, I would say sooner rather than later, next couple of weeks. If the Qs decide to fuck around in this range, or we actually roll over and do resolve to the downside, then I wouldn't imagine that Reddit is going to buck the overall trend and ride out. It's just going to continue to chop sideways, or weakness is going to hit it just as well.
Yeah.
So,
Joey, how much do you put into buy the rumor, sell the news? So the rumors, and they're pretty validated rumors again with their. It's not a rumor. I guess it's true. They're going to renew these LLM deals. And then I guess somewhat of a rumor that they'll settle with Anthropic at some point. When those two catalysts hit, are you still in this trade, or you think, or you got to kind of?
Oh yeah.
Yeah. Okay.
Yeah. So that's the thing where I'm looking at this company when we were talking about it originally, it was 21 times earnings. Yeah. So just if they kept doing what they were doing without renewals for significantly larger amounts, anything along those lines, Anthropic, isn't even an active deal. It's like an active lawsuit. It was just deeply undervalued. Now, the catalyst for it in the short term would have been these renewals. So I like this as a very long-term play, just from a complete fundamental standpoint. But the near-term catalyst would be these LLMs, which, even the rumor causing a 14% move. I think when Nick's saying sooner rather than later, if these deals get announced, that could be one of those things that forces this. If you get a big Anthropic deal, I think that's what's going to really start. That 14% on the rumor, I think it's significantly bigger on the actual news. And that's just one of three deals that they really have in the hopper to be cutting. And the CEO did an interview, I don't know if it was last week or the week before, and he was talking about just the importance of data, especially Reddit's data when it comes to training these models, and just the overall importance of what they do within the stack. That's why I love Reddit, because they're kind of like the Switzerland of data. They don't have their own LLM, like Meta has with Llama, or how Google has with Gemini. They're the one, they can feed their data to everybody else, and they're not a competitor to them. And I really like that for them. If they started building an LLM, I think that would be a bad idea, because then these companies might not want to be doing these deals with them. But that's the greatness of this. So then you add in all that, the potential catalyst to earnings, this multiple that I was, salivating over would actually be more attractive after those deals. Where, I think, I was looking at how big this company could get. And I think, eventually could be a $250 billion company. And, that's based on earnings from 2035, if it got there. And, that's where this stock gets, north of $1,000 a share. So this was the same kind of thing I was looking at when I was buying Meta in 2013, I think. Just the overall earnings power of this company, what it could do over the long term. And I think, Reddit eventually getting to a $250 billion market cap isn't far-fetched if they continue to execute at this level and continue being that data provider to LLMs for them to train on. So yeah, this is a very long-term play for me.
So another catalyst too, which they were not in the S&P 500, but September's quarterly rebalance, then December, the committee could also add more names. I think they'll probably get there on this time. Wells Fargo, to give some institutional credence here as well. Wells Fargo is forecasting that Reddit's content licensing renewals with Google and OpenAI could jump to a combined 550 million annually from the current run rate of 130 million. So, yeah, that'd be a massive, almost not quite 5x, but 4 and change x revenue from just those deals.
Yeah, and that's a purely profit for them. Like there's no cost. I think Jonas said it's like a 99.9% profit margin for them on those deals. So that's when it just goes straight to the bottom line. This is already a free cash flow machine, trading at inexpensive valuation. So, add all those deals on top and you've got a very undervalued stock.
Yeah. What else you guys got? We were talking about Indy last week. I don't know if we mentioned it on the podcast, but I know you guys were touching on Indy, which is, I don't know if it's in mini monster territory or too big at this point, but I'm gonna put you on the spot here with one because I don't know what they do. What do they do? Is a semiconductor company?
Yeah, semiconductor focused mostly on automotive.
Okay. It's trying to have that mic. Oh, is the guy? He's like, "What'd you say?" And it like froze on him.
Mike, yeah, what was that guy?
Med something with a one of the best.
It was about Upstart
all time with CNBC. He's like, "What do they do?" And the guy's like,
"Oh yeah,
I can't hear you."
Yeah, that was a firm, right?
Yeah, I want to say it's Medvedin or something. I'm blanking on the name. I'll figure that out. But do you guys still like this one? This was, it ran up. We should have probably talked about it on the podcast because you were talking about it quite a bit in the chat. This thing still got some run, you think? Or
I mean, this looks of it a short term, kind of like a fun trade. But yeah, I don't know. See what Nick sees.
Yeah, just on if I'd be kind of measuring this leg and kind of looking at this action right here as a spring. So like if we're looking at this range here, we had a failed breakout, price reverted back into the range. It actually took out the low, couldn't hold it, so it bounced. And then we saw this kind of shakeout. And, pending this does act as a spring, I think on the short term, you could probably just put your target back at $6. I would kind of agree with you. It's more of like a short-term Momo trade. There's not, unless I'm missing something. I don't know what the fundamental.
Nick, what are you looking at? 3 to 6 months that you like.
I still think cybersecurity is like, a freight train right now. Palo Alto's obviously getting a little extended, but like RBRK is just now kind of taking out this pivot high, the B point, which again puts kind of short-term target back at 100. Net was kind of lagging today a little bit, but crowd took off. I guess, it's given a little bit back lunchtime. Datadog, same thing off the 10-day. Datadog hasn't broken out yet either. So again, if you're looking at this as kind of your B point, or you wanted to take a cheater entry through 270, if you're not already, didn't kind of get long in here in the pocket. I don't know. I think, again, cybersecurity just seems like a no-brainer to me. Even if there's not a trade there, I think they're all names that should be on your watch list at the very least.
Do you pull up Nebius, NBIS?
Yeah.
That one is one we've talked about extensively. I was thinking that the news with the meta was similar. I did like a little write-up with the help of AI, so I don't hide that I sometimes use it. But it was interesting to kind of take a look at the comparisons now with, what was it? Google. So with Google and Micron. So Google came out with some news that they could compress memory by 6x. Micron had a huge dip on that news, and then it went on a historic run right after. Similarly with Meta, it wasn't very clear what they were going to be doing, but Nibius got absolutely rocked the past couple days last week. Is this going to go down to 150 like Joey warned me of, or?
Just from the I don't really like. I like and I don't like it. I like where it's sitting. It's sitting on the 50-day, and it's also sitting kind of right within this 1 what I'd call a high volume candle. So there's a kind of a volume pocket right here. Although the type of action I'd want to see coming out of this, especially after breaking this trend line, is kind of a big reversal bar that kind of engulfs this entire thing. This kind of just meh, whatever is kind of, I don't know, suspect. I being that you kind of took out this pivot high right here, it wouldn't surprise me to see this kind of take out this low and undercut it. You've got the gap at 180. I mean, again, I think to see that 150, 160, I would imagine that the cues or the market overall, you start to see some weakness come in. I think if we hold up, I would imagine that this kind of holds up as well. Not saying that I think it's going to break out and resume. It might just continue to chop around, but I don't know.
Yeah, and what I was even talking about here, Avi, is because we were buying this at low 90s, mid 90s, something like that.
Yeah.
And the whole idea was, I think initial trim was 200, then like 250, 280. And the idea was, turn a trade as a funding mechanism for a long-term investment. So like we were talking about rotating this from, Nebius into a Meta, Amazon, those type of plays. And, I wasn't specifying, I think it's going to 150, but that is where I would deploy capital back into it. Yeah. Because then I feel like the valuation would be somewhat attractive.
Yeah.
It's just a lot of how it's valued right now is the revenue it will generate years from now. And in a high flying market, like that works until it doesn't. And my whole thing was I didn't want to give up a great year and ride this lower, because if the market turned, the biggest winners can quickly give back a lot of those gains. It could still be up 100% on the year. Like say you got a stock that runs 300%. Yeah, it could still close the year up 100%. But if you didn't trim and rotate, accordingly, you're going to be looking back at your highs of the year like, oh, I'm still off 20% from my highs. Easy. And that's where the psychology of investing really screws you. And you start thinking about that number. So I just treat it as such. And I still love the name, 10 years from now. Yeah. But in the very near term, it's just like the thesis played out so quickly. The multiple expanded so rapidly that I wanted to play it more on the safe side.
Yeah, that makes sense. Kind of raising your floor is how I think about it. Yeah. And I did trim. We had that 14% day last week. And thankfully I did trim some before it hit. I think it went down like 25, 27%. The last like week or so. But yeah, I mean, it needs to play out pretty perfectly, exactly like how they want it. And they have obviously their subsidiaries coming on board too. With brain is blanking out right now. But yeah, I mean, I think it's one I'm holding on to, but yeah, I'm not afraid to trim if it goes on another huge run here.
For guys that I work with, I really encourage when they are writing out their trade plans to really hammer, whether you want to allow a trade to turn into a longer term investment or a day trade to turn into a swing trade, whatever. I don't think there's anything wrong with that. It's just a matter of managing your risk appropriately. And I think that when these guys are writing out their trade plans, if they can really write out whether it's a trade or an investment and why, at least at the inception or the beginning of this, let's say, trade that they're entering, they can kind of shift gears down the line. But it's nice to be able to look back, in my opinion, and be like, oh, INDI, this was just supposed to be a fucking trade. Why am I starting to think that like I should be holding this thing longer, or like it's starting to chop sideways. This was supposed to be a trade. I should be getting out. Like it's just tying up capital.
Yeah. But yeah, you don't want to turn the trade into the investment, because then, all my trades I'm typically doing on margin. So then if I want to keep that trade turn into investment, then I got to sell off something to essentially make room for that. And when I was looking through my portfolios, like I did not favor Nebius over anything else that I owned, basically as like a long-term core position, because I had nothing to really justify it on. Like you don't have this earnings base. Like as a fundamental analyst, I didn't have anything to justify keeping it over on AppLovin, Robinhood, Meta, Reddit, anything like that. And as overvalued as crowd could be right now, I think cybersecurity it's one of those staying power, and the name I can't trim just because I've been in it so long that I'd get absolutely torched on taxes at this point. But even then, I still think, cybersecurity over neoclouds. And then it was just even like lucky timing with our discussion from like the Meta news and all the confusion that came from it.
Well, and that was my fear, but I thought it would be like 2 years out. Would that the hyperscalers they'll find a way to get it done cheaper. They'll figure it out, at some point. So we'll see. That is a fear of mine, a couple years out. Go to Amazon, just because we were talking about that's the flight to safety that we've been looking at. You look at that like zoomed out, even like 5, like years, and it's had a few runs, but it hasn't had like the monumental run, which is hard for these bigger, the mega caps, obviously to do. But the way Chris Camillo was talking about this, he's like, it's due for a breakout soon. You see that on the charts right now, or what is it?
Yeah, you on the larger time frame again. So you've got a massive base, and then you've got a shorter base, just a base on base pattern. You had this, wide range candle breakout, kind of paused. You didn't really want to see price revert back into the range, but the fact that we're kind of creeping back through it is definitely a positive. And we're holding the moving averages that I have on my monthly is I believe this is the 12 and then the 18-month period. So it's like a year long and then a year and a half. And I don't know, again, like putting in a higher low here would look fantastic. And it's kind of doing exactly what at least the bulls should want to see happen. If you really wanted to kind of get like real technical, you could probably throw fibs up and just say, for me to get real bulled up, price has got to get back above 245 and hold. It's the 50% retracement of this big kind of wide range candle. And as soon as we can kind of get through that and hold, I would be in the camp that we're going to go back after the high of the candle, which obviously is putting price back at pretty much all-time highs. And then it's like, okay, well, we're just a stone throw away from an all-time high breakout.
Yeah.
So yeah, I like it. If you're talking about flight to safety too, it's like, can you really go wrong with Amazon?
Right. Well, that's what I always say is if Amazon gets cut 50%, the world's a lot more fucked than worrying about your stocks
totally.
at that point, I think. Robinhood, Joey, you absolutely love Robinhood. It's becoming, almost what Elon Musk wanted to create, is like the everything app for finance here.
Yeah. I mean, we talked about this last week where, it's the financial super app. Like I've got the credit card, bank account, custodial, brokerage, retirement. Like I've got everything with them. They're going to keep launching more. I saw someone like Vlad had prompted, what do you want to see from Robinhood? Someone said a Venmo type app, and he said it's on their roadmap. So they're just going to keep doing this. And then you see the Trump accounts, which is Robinhood and I think Bank of New York Mellon as a partnership. So, you're going to see millions of these Trump accounts opened on Robinhood. And then if he gets these adult investment / savings accounts, which was just a rumor today, but if that comes to fruition, I mean, this is millions upon, tens of millions of more accounts being opened on Robinhood. So you see that as the base grow, just get more consumers in that door. And how Robinhood really won me over was, I had a small brokerage account with them. And then they had a promotion where it was like 2% just to move over your accounts. And I thought, okay, there's going to be a cap. There's going to be something, no cap at all. So of course I put in my transfer from Charles Schwab to Robinhood, and a Schwab person called me and they offered something to stay. Like, not going to even say the dollar amount they offered, but it was 1/10 of what Robinhood was giving me to move over. And I was like, I think you forgot a zero. And he just kind of laughed. He's like, no, we can't come anywhere close. We don't know how they're doing it. We don't know how this is going to be profitable for them in the long term. And that confusion from the traditional like dinosaur in the industry to this new industry titan, I was like, okay, that kind of gets that wrap your head around that with what Robinhood's doing. And they just continue to deliver. Then you see they're offering like bonuses to Tesla shareholders and then SpaceX shareholders. Like they're just going to throw money to grow this account base significantly because they could push all the earnings and free cash flow down the road. Mm-hmm. And the funny thing is when you see Bitcoin in the dumps, this used to trade, very closely with crypto, but it's completely diverged away from like a Coinbase. They used to trade almost in unison. Mm-hmm. And you see Robinhood is having a great year. Coinbase is in the dumps. So that's the other thing. Like if Bitcoin and crypto in general can turn around and get back to the glory days, like Robinhood's going to get a lot of benefit from that as well. So this is just one that,
I mean, honestly, I think GP's point to like the mag names is probably very similar to crypto and like Bitcoin and Ethereum. Like, I don't think like Hood is showing so much relative strength that relative to like, coin and even Bitcoin that I think Bitcoin just needs to stop getting decimated. It doesn't necessarily need to really even return to highs. I think. I don't know. What do you think?
Yeah, even if this gets back, like Bitcoin gets back to 80,000 or like just any sort of strength
at highs.
That's selling. Because that's the other thing. Like Robinhood makes money regardless of the direction of Bitcoin, but everybody knows as crypto is going higher is when people trade more because they're more excited.
Right.
So that's where Robinhood starts to generate more revenues. But I think it's still less than 20% of their overall revenues, like the actual crypto business. So while it's a healthy portion, it's not the bulk of the business. Then you see what they're doing with prediction markets, everything else. Like we said, this is just the finance super app now. And yes, a lot of people like to say, oh, look at its market cap compared to Charles Schwab and all these other things. Like you got Robinhood's a $105 billion company and Charles Schwab is $175 billion. But you look at the overall asset base where Schwab's in the trillions and Robinhood, I don't even know where they're at. So you should, based on assets, say Charles Schwab's worth significantly more, but they're not doing anything close to what Robinhood is doing. And that's like the whole thing we see, with these disruptors or what Chris Camillo was saying is like, you look for the company that's changing the industry because they will be the winner long-term.
Yeah, they need to create they're kind of getting there close where if you make a prediction on the World Cup, you can then put that money into stocks.
Drew does it better than everybody. He'll win his prediction and he's like, it's going straight into Hood stock. So using your predictions to fund investments. Now, not everybody thinks like that. Hopefully they do one day. But yeah, that's always been like the dream. Like
if you lose, you don't lose the money. It goes to investments. And if you win, it also maybe goes to investments. Now that's the app that I want to make is if you lose your money, it forces you to push that into an investment versus actually giving it to
you have to match it. So like if you lose $500 on
we're
betting
still
on
looking through a lot of the components of how this would work, but
dude,
it should be if you lose 500 on a bet, you have to at least put 500 back in your investment account to make the next bet.
Yeah. The idea is that you're growing instead of losing constantly. What else are you looking at, Nick? Anything exciting up your sleeve here?
I like the rebound in Tesla today quite a bit. I think Rivian.
Rivian.
I guess we hadn't really brought up Rivian today, but man, it's the same argument or somewhat pattern as Reddit, where you had kind of this range build out on a trend line where the ideal was a higher low gets put in. So going back to the weekly, you have this massive stage one base and we're perpetually putting in higher lows. The closes on these weekly charts are real tight also at these kind of pivot higher lows, which I think is great. And then today or last week into this week, we're getting kind of the squeeze push out of this. Yeah. I think if this was a massive failure and a breakout of this range, and the fact that price reverted back within the range and didn't go after the lows is massively bullish. So it basically is telling me that it just didn't have the juice. Timing wasn't there for it to really take off. They smashed it back down, and all they did was accumulate as they pushed price down. Kind of like the basketball underwater argument. I don't know if Rivian really has the basketball underwater feel to it, but this base looks sweet. I think it's ready to go.
I like that no one's really talking. I mean, I don't see a ton of people talking about it yet. No. I feel like that's when you want to
They're sick of it. Like even like guys that I respect and love on stock twits, I see them either post like Rivian and I'll just fucking troll and be like, dude, this is boring as shit. It's in a range. like wake me up when it, wake me up over 19 or, whatever. But this action is good looking, I think.
They got the R2 that's started to make some deliveries now. Their new car, which is coming out. How closely correlated? I don't know if you have the ability to like put it next to Tesla, but is it like pretty much the same as, or is it moving differently?
I don't know how to overlay the charts. I can kind of look into that and figure that out for next week. But I mean, I think both of them. Here, let's just go out to the monthly. So Rivian has basically been in this stage 1 base for the last, let's just call it 3 years. Tesla's more or less in the same camp, same category. It's been in a range, well, actually longer than that, but it's just a higher priced and obviously a leader versus Rivian.
Yeah, they did double down on their conviction, raised full year 2026 delivery guidance from 65K to 70K vehicles. Earnings are in early August. So I think that when I was researching this one too, because I remember Sniper, who comes on Tuesdays on our show, he was long-term bullish on it as well, just because like the margins on this vehicle, the R2, are going to be significantly better, and it's a much better entry point for a lot of people. And so it could be the car, like how Tesla's done it too. Like people think of Teslas, like they're actually not that expensive, right? They're like $30,000-$40,000 now. And so this is another angle to play, and like Rivian, it's interesting. I got to dig more into it, but I do like what you guys are saying. I like the concept of obviously getting in before everyone starts talking about it, and then it feels too late.
The way the chart is set up, it really looks to me like you're risking between $2 and $5 to make a minimum 20. You're like, if this breakout sticks, I think you get a double out of it. Like that's putting it back at 40. I don't think that's a far.
Yeah, so you're saying that coming into after earnings, or what time period do you think?
I mean, if that's the catalyst that breaks it out, I don't know. We're looking. I don't have a good feel for. I don't think of time like that. I guess it's tough for me to try and put the time. I can in relation to the chart in terms of like a pattern. So if it took like, let's say 3 months to build out, like, let's say a descending wedge, I could say that I think once it breaks out, it's probably going to take between 2 to 3 months to hit that measured move. But I don't have the wherewithal to say, like, I think it's going to go to this price by this time.
Good transition after I say this. The software services segment grew 324% year on year, makes 27% of their revenue. So that's interesting. They got a partnership with Volkswagen there. Brings me to BlackBerry. So our other buddy who's coming on tomorrow is a big believer in BlackBerry. It had that huge move last week. I think it was last week. It was up like 40%. This is one that I had as like one of my first mini monsters. I think it was in the $1.50 range or something. And of course I sold it at like $2, $3 or something. And so it's been running since. But I think the thesis that I had back in the day was like their partnership, not only with Amazon, but like the Internet of Things, like all those drones, all the autonomous vehicles. They got to make sure no one hacks that. Right. And so is it QNS, or what's their system called? It's been a while. I got to dig into it again. Yeah. But, that system is going to be deployed, I think, throughout a lot of these vehicles and a lot of this automation that we're going to start to see in Internet of Things. So it was kind of stock that I'm not in it right now.
Do you like Nokia then too? Because I've seen both of those are kind of running in the same sentence.
Nokia feels more memey to me.
Yeah,
but like I'd agree that they're kind of in the same thought process, like these old companies that are making a revival and pivoting. But BlackBerry to me actually has like a better story behind it, and I know that they have a decent partnership with Amazon. I think my initial thesis was Amazon would buy them. I don't know if that will happen, but it's a fascinating story to say the least, for them to come back. I don't know what the charts show you here. It had a crazy run up, so it's hard to buy in right now, but
yeah, I think the trend's up. Again, kind of broke out of this big base. I threw fibs up from the breakout of the range, which is kind of here at $5, and then I also drew them from kind of the low of the move, which is about $3. And when I drag it up to highs, I try to look for areas of confluence, and usually the 0.5 to the 0.382 is usually kind of the sweet spot that I'm kind of looking for. So like if you were trying to, get involved in BlackBerry on weakness, you might want to try, at verse $11 and just see if it holds. But I think I'd be more comfortable trying against like this candle right here. It's a high volume candle. Whether you wanted to try, throw a trade on versus 950 or versus kind of the 1050, this is kind of your spot where I think that the risk reward is favorable, at least trying to buy it on a backfill.
You know what they need to do? They need to change the name from BlackBerry to QNX Technologies.
Yeah, it'd get a fresh revamp.
Yeah.
I miss my Crackberry so much.
That little ball.
I had the Pearl for the longest time, but the wider one, like the more square one was, dude, I freaking love that thing.
Yeah.
You know what, cyber stock, since we talked about it last week, which I just kind of mentioned it in passing over like the overall strength in cybersecurity, but Tenable is up another 35% since we talked about it on Monday.
Oh, shit.
Wow.
I think something's going on here. So I remember when they first came public and I was like going through the S1, they were like a big contractor for the NSA. But something seems to be going on at this company. I always thought they'd be acquired by a bigger player or something, but like the move has been, this is 50% in a month, but just 35% in the past week, 133% in the past 3 months, just on an absolute tear. It's just a straight line up.
When you brought up that Affirm story with Mark, what's his name on CNBC when he didn't know what Affirm did? I can't remember his name. Mark.
Minervini.
Yeah.
There we go.
It was Upstart.
He coined Upstart. That's right. He coined the term VCP, and a VCP stands for volatility contraction pattern. So like, this is great to have on your radar now, kind of to your point. Like you had a spring right here and a straight V out. A VCP would basically say that what you want to happen is price to kind of rip up and then get real tight and kind of just chill up here before ultimately like it rips higher. So like when price is still in a range or in a base and you see moves like this, I get really excited because again, like this is like telling you that this is ignition. This is an igniter move.
Mm-hmm.
We don't necessarily know for certain that we're going to get the follow through, but like the odds are in your favor.
Yeah, the growth, they're going to grow revenue at 7%. Free cash flow margins are healthy at 25. You know what I always paired this with was Rapid7, RPD. These are back. I'd always look at like all the different, this is another one up 35% in the past week. So I used to always look at cybersecurity, and this is back when like SaaS was super popular. And I was always thinking, what SaaS, like where's the platform that all of SaaS could plug into? So like HubSpot was the marketing platform that all other software is kind of plugged into. CrowdStrike was the cybersecurity platform that like Zscaler and all these other essentially features could plug into. Rapid7 was a feature that I always thought would be a cool bolt-on acquisition for a CrowdStrike or someone else, because this like determines how susceptible your company is to breaches. At least that's what they used to do back when I would study them. Like they would assess a bank branch to see if they were like at risk for a breach. So Rapid7 for a while was a pretty cool software company. Now, of course, you see this has not worked out well for them in the past couple of years. But when I was just kind of going through what other companies like Tenable in the cyberspace appear to be catching a bid, this one just popped up.
Probably.
And that was interesting because I remember this used to be like a 40, I think it was an upper 40 stock. And it wasn't, it's back like when Proofpoint, remember PFPT before they got acquired? This was, yeah, down 57% the past year. Now, granted, growth is negative, down 90% the past 5 years. Growth is negative this and next year. Gets to 1% growth 2028. But yeah, this is just 15% free cash flow margins. It's trading at less than 10 times normalized EPS. This could just be a bolt-on acquisition for somebody.
What I was trying to pull up, now my computer's cracking on me. I was trying to pull up StockTwits trending topics here.
The most interesting one that I was just looking at was, so TeraWulf, they've been trending number one almost all day because of that Anthropic deal. Dell, which we've talked about a bunch, Datadog, which Nick touched on not too long ago, but ServiceNow is back in the trending, which I know Nick was a fan of before.
So this is a big position. Ben has a big position here, and it's kind of what's kept it on my radar. Both ServiceNow and Microsoft, you know, this kind of pocket or air pocket up to the 200 day, I thought was kind of an easy trade. I didn't anticipate the fail being this hard. I kind of thought it was going to kind of drizzle into here, but either way, I think now still looks pretty good. It's just shaping up to, let's get carving out a bottom basically.
Well, as a Trump stock, I was reading that if you took all of Trump's names, they're up 70%, I think, on the year.
Yeah, someone was actually asking for
telling you what to buy.
Yeah,
someone was asking for StockTwits earlier to have like an alert system specifically for when Trump mentions a ticker. Which, I mean, it'd be cool if there was like, we could go through the public filings and send those alerts, or like put a little badge next to Trump stocks. But now the problem is he owns so many now that we just have Trump badges everywhere.
Yeah, you'd almost have to kind of create standalone, like almost StockTwits sponsored, like have a StockTwits sponsored like Trump account that just kind of retweets like of importance tweets that he tweets.
We've actually got the Trump Truth Social bot that as soon as he posts on Truth Social, it automatically posts what he posted there on StockTwits, just because that became like the main mover of the market for so long.
Yeah,
that we kept going over there, then like screenshotting, bringing it back, and we're like, shit, find a way. So we sent it over to our mega nerds on the tech team, and they spun it up in like 10 minutes.
Yeah, it is. It's yeah. Why fight it? He's giving you the answer key. So, yeah. ServiceNow is that was one I wanted to get in before that big run up, and then I thought I missed it. But now you're thinking this is a good opportunity again. Huh?
Yeah, I've traded this like 3 times. Nice, like 15-20% the first time. I think I got torched. Buying into the run up Nick showed, and on the way back down, I think is like an 8 to 10% loser. But yeah, this is one that I feel like once the market sends it significantly, like, yeah, I think it'll get re-rated quickly. The cool thing I saw is like everybody's saying like, what the hell does this company even do? I think that's the big issue for ServiceNow is no one truly understands what they do within like the AI implementation.
Sure.
So all I know is Jensen Wang loves them. Trump loves them. So you've got.
Yeah, we need a Jensen tracker too. He's the even somewhat more powerful voice too.
I mean, Marvell, I was looking at that again. So, I mean, it's sitting in like the 250s, and that's just an absolute machine right now.
This is kind of if it can hold here, this is kind of an easy entry candle. It is an inside bar after kind of a move down, but the fact that you had this breach of the low and they can hold it right here. This is about of a low risk entry in a name like this. I think that you could probably either risk today's low or Thursday's low and still be sitting just fine.
Before we run out of time, the last one we got to hit is Palantir.
Yeah.
I think Alex Karp's interview, I don't know, it was last week or the week before, explaining how companies are quickly realizing trying to build their own AI models and deploy costs so much that essentially Palantir is the more cost-effective way to go about it. Sure. And like Karp, he's an absolute psychopath, which is sometimes great to have as a CEO. But that interview of his, I thought it was pretty damn good. If you haven't seen it, worth a listen, because the way he explained what was really going on and how Palantir will be the long-term winner, then putting out that he's going to pump out what, $15 to $18 billion in free cash flow within, I forget his timetable, but like if he pulls off what he says he's going to pull off, this stock is incredibly undervalued.
So basically the big takeaway from today's show is you need to own Palantir, Hood, and Rivian is what I'm hearing.
Damn it. All right. I was going to say no Rivian because I like other stocks, but if that's what we're going to do, then I'll do it. Just to trade along until next week.
We need and I won't put you on the spot. Maybe next week we have a trade of the week idea too. I think that'd be a fun segment. And anyone listening, if we're a pot of the people, so definitely give us suggestions for fun segments we could do. What is entertaining for you guys to watch and whatnot. Tomorrow we have your buddy Caleb. So Joey's just feeding me all these amazing new hosts.
Yes, father of trades.
Father of trades on.
Absolute psychopath. He's called on podcasts, but that man, I hung out with him in Coronado last year, and he is a psycho. I love this man.
I love psychos.
I do too.
Love psychos. Then we got Corey Clipstein. That's a Bitcoin guy. If you guys are unfamiliar, founder of Swan, coming on at 1 o'clock. And then we got KT Sniper at 2:30. So big week. Everyone's back from 4th of July. People are still feeling on vacation somewhat, but we're back. We got the summer months ahead of us, and we'll be back Monday. I think 12:30 is next week. We're going to start doing 12:30 for you guys with this show. So appreciate you boys coming on. Enjoy. It feels like a Friday already, but it's Monday. So enjoy the rest of the week here, boys, and we'll be back here. We'll be back tomorrow at 12:30. These fellas will be back 12:30 next Monday. So appreciate everyone tuning in, and see you tomorrow.
Cause we pop them like overridden vodka. C3, okay, a millionaire.